Alright guys, welcome back to another video. In this one we're going to be going over the week ahead, the overview before the holidays, a gold trade that we actually missed, and my active positions for options for the week. So I thought I would tie together all three of these things into one video and make that every single week so you guys are updated on the positions I'm taking for active swing trades, anything I'm looking at for the markets this week in terms of my data perspective, and the options positions that I'm taking every week now. If you're new here, this channel is about swing trading, selling options, and overall boring but consistent ways of trading the markets. So let's jump in just by saying this is one of those weeks where I want to be very clear up front. Don't break your back trying to force trades this week. Liquidity is drying up, volume is falling off hard as we head into the year end. And when that happens, markets just become kind of erratic, thin, and just unreliable overall. So unless you're getting a true A+ setup this week, it's just for caution, not aggression at all. For me personally, I'm not looking at taking any new active swing trades. We're almost at the end of the year, and this is a good time to step back, protect your capital, and reflect how the year actually went. I want to walk through the calendar first because this is where the data, the context matters more than the numbers this week. So obviously Sunday, Monday, really nothing. We just had an FOMC member speaking with commentary. Nothing market moving expected here. This is just mostly background noise given the time of year as well. And no one is really repositioning aggressively off Fed speeches this late in December. Tuesday seems to be the busiest day with ADP employment change, preliminary GDP and durable goods, consumer confidence, and manufacturing data. Normally, this would be a very active session, but in late December, you have to understand that even an important decision doesn't always get respected when participation is extremely low at this time of year. So instead of trading reactions, I'm just observing. Is growth still holding? Is the consumer stable? Is anything breaking structurally? Not trading it, just kind of logging it for 2026. Wednesday seems to be the release that I actually care about and am paying attention to with unemployment claims. This matters because it helps me frame labor market stability going into the new year. Again, I'm not trading off of it this week, but I am using it to build a macro bias for early 2026 positioning. Thursday, Friday, obviously we have a bank holiday. There is going to be effectively dead liquidity. It is not a trading environment. And by the time we even get to here, the week and year is functionally over. And this is, again, what I very much want to emphasize. Late December markets are notorious for thin books, random wicks, false breakouts, stop hunts with no continuation. This doesn't mean opportunity doesn't exist. It's just one of those things where you need to manage your risk to reward, and it's skewed against over trading. So my mindset this week is very simple. If something shows up that's undeniable, I will consider it. Otherwise, capital preservation comes first. I really do not want to be going into Christmas dinner this year absolutely fuming off a swing trade I knew that I shouldn't have taken in the first place. So jumping over to the charts, we actually did miss a very clean gold trade. I'll break that down on the charts, not as a regret, but as more of a lesson. This was a good example of structure being clear, bias being correct, but just timing not lining up with the execution rules, and that is totally fine. Missing good trades is part of the trading game as well, and focusing on bad ones is how people just give profits back to the markets. So this was the gold trade that we just took that was, over the course of over a month, or I think half a month actually, that you guys saw. I made a breakdown on this. This was great, but I hope some of you remember that I was looking at targeting a break and retest of this zone right here. If you guys remember, what I was saying is the key thing that I look for with a macro bias is some sort of consolidation and giving us a good area of interest that I can use for a break and retest off of and continue back to the highs. So I was saying in that video that I was looking for this area of interest to get broken and retested. The macro bias was there. The market structure bias was there, and the market structure was giving me a very clean entry. As you can see, we just broke this swing high from the left, which gave me even more confirmation. And all that means is with creating a new swing high, we have created a new swing low, which will be respected. And we are playing in this tight range, meaning I'm very happy to have one test, two tests, before being broken with good momentum. And that was a key. Remember, I always talk about you need to break an area of interest with good volume and momentum. If not, it's probably just a wick and we're going to fall back below. As you can see right here, we kind of wicked the area of interest and came all the way back down, retested this low and area of interest off the lows here before coming back to the highs. Well, now we did miss this trade by, I'm not even kidding, just a few points. As you can see right here, I did have a limit order set. Unfortunately, it was a wick that we did not get an entry off of. And as you can see, gold is absolutely ripping now, especially in this Asia session. So no harm, no foul. This would have been, a great way to end off the year, but I already had such a great trading year that I'm not really interested in, forcing a trade. As soon as I saw this, I was thinking, hey, maybe we could get a good break and retest of this area, but I didn't like how we just kind of shot through, rejected off it, and came lower. This would have just given me some, unwanted stress of, hopefully we're not going back to the downside. The bias was kind of fading due to this being the end of the year and everything. So again, not something I want to force myself into. I'm very happy just kind of waiting and letting the year trail off before building a fresh macro bias for 2026. And I'd like to emphasize that because that is not fear, that is just discipline. If the market isn't offering any kind of the conditions that I want for higher time frame positioning, there's no reason to rush that. January will give us new liquidity, new positioning, and new narratives. So this week is about ending the year clean and not squeezing out one more trade and absolutely flipping a table at your holiday celebrations. So that being said, I am still very active on the option side. If we hop over to Interactive Brokers, you guys can see that I have a couple puts that I put in and a few calls for the week. I'm holding some calls that have already been in motion from last week, as I mentioned before. So there's no real adjustments here, just kind of re-upping some of the calls, but a few things have changed, which I'll go over. And for the cashier put side, this week is very controlled. Earlier in the month, I was targeting that more aggressive 1% weekly return, but with volatility being this low, that's just not realistic anymore, and I'm not forcing it. Just from setting up the positions last night on Sunday, coming into Monday, the premiums have dropped so much that I really am not even looking for much. I don't really care about the percent gain too much. As long as we're locking in a little bit of profits, I'm very happy with that. So instead, this week is more about smaller premiums, safer strikes, and just looking to bump up my December numbers slightly without adding any stress to myself. Again, these are companies that I'm already comfortable owning, and that is key. Some people might disagree with some of my picks or how diversified I currently am. I do have a bunch of free capital that I'm not using because I don't want to be jumping into massive positions in the last 2 weeks of December where I don't know what could happen over the course of the next 2 weeks and going into the new year. So again, this is not financial advice. You know, you can listen to what I have to say, but you do not have to make picks based off what I'm picking. I am more so just educating on my picks, and I'll always give a valid reasoning for why I chose these stocks. Late December is not the time to get cute with the markets. So as you can see, we are still down about $1,000 on Dell. If we hop over to the charts, we did actually come very close to the covered call position that I sold last week, and then we trailed completely off, which, you know, kind of a bummer because the premiums were better up here, but now we're selling covered calls for free basically because we have a lot of ground to make up before getting back to those highs. I do think Dell is obviously a great pick for the new year, and I'm very happy to own it at these lows right here. We do have significant support, as you can see from this green line right here, and we're making our way through these resistance levels. And if you have a market structure perspective on this, we are putting in some higher highs and higher lows. If we did break this low, I would start to get maybe a bit concerned. I can either average into the position or I can start looking for an exit strategy on this one. So next we can take a look at IREN, because last week we were negative $5,000 on this stock, and now we are currently sitting at negative 2,700. So almost a 50% gain on the losses right there. Very, very happy about that. We are making a good comeback on IREN. As from a covered call perspective, really nothing much going on here. We did have a good recovery on the stock itself. I did place a covered call just back at that price in the off chance that we get back there. It does give me a good reset, but over the course of the next couple of weeks going into January, I still see some big things coming from this. We're not really making any premiums from Dell or IREN on the covered call section. It's probably like a couple dollars, I think like $30 total. I'll go back to IBKR, we can double check that. But mostly what I'm waiting for is a good push, and then into the new year, we can reevaluate. We can hold this stock all the way back to these highs, and we can sell these covered calls in the money for a fatter return. So not a lot going on with IREN. Again, it's whatever. Palantir is where things do get interesting. If we hop over to the charts, you can actually see that I'm up a good amount on the shares right now. From where it's currently trading, we are up around 4.6%. To the highs, we were actually up around 7.6% on the shares alone. This is awesome. I'm very happy to see this. Palantir is going to do some great things in the future. I am very bullish on this stock. I have been for a long time now. Personally, I'm not upset. You know, we did wick the covered call position, but we're not going to get called away on something like that. We're going to have to expire for that. So I am waiting for Palantir to kind of make some more structure, push above and close above. If we go back to Interactive Brokers, you can see that I sold a $197.5 call, which means if we stay above $197.5, these shares will get called away. I will make the money that is involved from the share price. So if we had a 7% gain of the shares, I will get called away with a 7% gain, and I will get called away from the premium price of selling it at $197. That being said, we are getting paid around $218 just for making the agreement to sell it. If Palantir does not expire above that price, I will just keep the $218 and we can continue doing that again next week. This is one of those situations where options do pay very, very well when the stock is above your current share price as well, which means you're selling in the money, meaning you can set your covered call position wherever you'd like, and you're guaranteed a really, really good premium. But that's where you start playing with your percent gain, because if I want a percent gain up to here, that's fine, we can sell that there. But if we want a bigger percent gain on the stock, we can sell a covered call up here, earn a bigger premium and a bigger share price gain. So that does conclude this week's covered calls. Now let's get into the interesting cash secured puts that I made for the week. We can start with Hood. Now if we hop onto the charts with Hood, I did have a much better premium I was hoping for with this. When I set the order, it was a lot more. Currently, we just kind of trailed off a little bit. I'm not too concerned with this because we are still sitting over 5% away from where my cash secured put is. And I'm not too concerned about this because we are sitting over 5% away from current price to where my cash secured put is, meaning the stock would have to drop another over 5% to assign me the shares down here. And if we did that, I would not mind owning Robinhood at, you know, the 116 level, because I do think we have a lot of upside, especially going into 2026. So it is one of those things where I'm staying tactical about it. There was a good amount of room for me to sell this cash secured put, earn some okay premiums, but nothing too crazy. It is just a good amount of standard deviations away where I'm comfortable owning it, where we would have to drop a lot of points to even get myself assigned on this one. And if I do get assigned, I'm not complaining at all on this. Next, we actually had Reddit. This is an interesting pick for me because I did call out the Reddit pump before this actually to my friends. I was like, Reddit is so crazy undervalued, and I was actually positioned way before this pump. So now I wouldn't mind owning it as we've created a lot of support levels down at the lows. So what I ended up doing was selling a cash put at $222 roughly, and right now we are sitting around 4.8% away, so almost 5% Reddit would have to fall just to assign me down here on the shares. Again, we're sitting with okay premiums on this, nothing too crazy, but it is just something to bump up my monthly percentage, which I'm very happy about. We can end the year very strong with this, and if Reddit did assign me at this level, again, I'm not upset. I'm getting Reddit at an over 5% discount in price. Finally, this was probably the most craziest one. We actually had SanDisk as the last one. We are crashing pretty hard right now. I did have a 212 put right here, meaning if SanDisk did drop to this level, it would assign me 100 shares at this price before pumping back to the highs, I hope, where we would exit the position. I did more so want this for the premiums because this did have better premiums than everything else this week. If we take a look, when we opened on the day, we were around 16% away from my current cash secured put. Now we are a mere 7%. So if SanDisk drops 7% in the next few days, I will get assigned these shares. Again, not upset about that. I do think this stock has a lot of room to grow. It is a fairly new one. That's why I was a little hesitant about it, but you know, this is how you make bigger plays in the market. This is how you can start understanding other stocks and just progressing your trading journey, playing with new stocks, old stocks, stocks that have been around for 10 years. This one was the riskiest play in the book, I think, this week. I do want to kind of push myself to make some different style plays, and this one was definitely a new one for me. So we'll see how this one plays out. Personally, the thing I was concerned about is SanDisk does just have a bunch of dips and a bunch of recoveries, and as you can see, it does move a lot. There's a lot of volume. The candles are very big, so even though I'm over like 8% away from my strike currently, that's like 2 candles. If we had like 2 more red candles this size, we're getting assigned on this. Again, I'm not upset to be assigned about it. At the same time, is this something I want to be in for the long term? Maybe not, but we can have a good exit strategy or a good percent plan to make some gains and then get out, with share price or a covered call. So this concludes the weekly overview, the missed trade that we had this week, and my weekly options positions. Again, for the options positions, these are expiring on Friday this week. I'm only running weekly options unless otherwise specified. And again, this is gonna be an end of year thing. I want you guys to take a moment to reflect, obviously, on your trading year. I'll be doing the same. This is just a great week to step back and ask yourself, did I follow my rules this year? Did I overtrade? Where did I hesitate when I shouldn't have? What actually worked? Because the market is about to reset for the next year. And the traders who do best next year aren't the ones forcing trades this week. They're the ones coming into January with clarity. So to sum all of this up, don't force trades this week. Respect low liquidity. Use data for context, not reaction. Protect your gains and take some time to reflect on this year. For me, it's about observation, light options, positioning, and preparation for what's next. The market is not going anywhere, and the best trades of the year are almost always taken when conditions are always right. If you haven't already, make sure to leave a like, subscribe, and comment if you have any questions below. And with that, we'll see you guys in the next one.